Well, it was an interesting market day. We had to digest everything that was going on with President Trump and the UN. We also found that consumer confidence was at one of its highest levels of all time. We found some merger news today as Sonic, the restaurant company, was being bought out. We also saw Versace get bought out by Michael Kors. We also found that Nike is coming out with earnings after hours, and that's been a hotly anticipated one, considering their Colin Kaepernick news here recently. So a lot of different things going on in the market. We did close near the lows for most of the U.S. indices, but we retain our bullish intermediate term posture on most of them. So we'll take a look at all of that, and then we'll take a look at a trade idea here from the technology space that somewhat surprised me here today. So I'll explain when we get to that portion of tonight's video. Let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 25th, 2018. First of all, if you're new, welcome aboard. We're grateful to have you in our audience tonight. Remember, you can subscribe to our YouTube channel by clicking the subscribe button. While you're there, go ahead and also take a look at our description area where you can sign up to become part of our email distribution list. So that way you can receive those overbought and oversold cluster signals on a daily basis as well. We're also big users of Twitter. Make sure you're following me at Brandon Van Zee. And if you ever see any of our tweets that talk about the Market Outlook video, we would encourage you to click like and retweet if you get value out of these videos on a daily basis. In addition to that, we're also on Facebook. You can see our group address kind of embedded within the logo in front of you. With that out of the way, let's go ahead and dive into the market analysis. So as you can see, I've got chart 4B pulled up in front of us here. For those of you that are premium market scholars, you can follow along at home with your chart setup as well. And this particular chart setup is just going to be looking at the market forecast indicator on 4 different major U.S. indices. And what you need to know about these 4 grids or these 4 charts is that each one of the charts is 3 months in length. Each one of the candles is 1 day in length. Also, when you see a green background color, that signifies that we have a bullish intermediate posture on the market forecast indicator. If you see pink background color, it means that we have a bearish intermediate posture on the market forecast indicator. So 3 out of the 4 major US-based equity indices do have a bullish posture still at this point, with the exception being the Russell 2000. You can see it's shaded in pink down here as it's kind of struggled to keep up with some of those larger cap areas of the market. Now, having said that, the Russell 2000 actually did the best out of the 4 today. It was up 0.2% today. Meanwhile, we saw that the mega cap Dow Jones up here was down 0.26%, and the S&P 500 was down 0.13%, closing near the lows of its session. But you will notice that the background color of the chart remains green, so we still have that bullish posture. And in addition to that, we also have what's known as bullish intermediate confirmation signals on both the S&P 500 and the Dow Jones Industrial Average. Remember, that particular signal is made up of 2 out of those 3 colored lines in the market forecast, the green line and the red line. And what you're looking for is the green line to have a bullish tilt. In other words, it's either in the upper reversal zone or traveling higher between 20 and 80 on this graph. So with it in the upper reversal zone, as an example here on the S&P 500, then what we're matching that up with is the red line, the momentum line, in the lower reversal zone. And so you can see that is taking place right here on both the S&P 500 and the Dow Jones Industrial Average. So technically, both of those have bullish intermediate confirmation signals, which is kind of a buy the dips mentality. When you have a strong trend that's in place, and then we have a momentary pullback as we've been down the last couple of days, then this is a place where you can buy that trend at a cheaper price than you would have in prior sessions. So one thing that I will point out is that while the blue line is not technically part of the bullish intermediate confirmation signal, we have noticed that these signals perform a little bit better if the blue line is between 50 and 20. And in this case, you can see that in both of the cases of the Dow Jones and the S&P 500, we've got the blue line in the lower reversal zone. So it would not be considered an ideal intermediate confirmation signal there. One other point that I wanted to make is that the NASDAQ fared pretty well here today. Notice down below the NASDAQ was up 0.18%. It continues to have a bullish posture, continues to be above a rising moving average, and we really got what's known as a close above the high of the low day with that as well, since yesterday would have been a low day after a little bit of a pullback there to that moving average. Nice bounce off of that moving average here today with all of those market forecast lines pointing a bit higher. Let's go ahead and take a look at some other charts here while we're at it. Let's take a peek here at our 12 grid. Let's look at the U.S. sectors 12 grid. Get a sense of what's going on with the sector action here today. Now you'll notice that the utilities really got whomped here today. They were down 1.35% today. Utilities were actually the sector that we focused on in my dividend growth investing class today. Remember, as dividend investors, we actually want to see prices fall before buying a security because it means that the yields of those securities is likely higher. So for those of you that are premium market scholars, subscribers, you should be able to access that by the traditional means of coming on over here to our website. And let's go ahead and show you here real quick how you would access that, since sometimes we do get those questions about navigating our website, and we want to try to help you out with that as much as we can. So just come up here to your events calendar, click on the events kind of menu item up at the top of our website, and then once you've done that, kind of navigate down a little bit until you get to today's date, which is the 25th, and there is the dividend growth investing recorded. And so that was the one that I referred to that we discussed those utilities. So we looked at two different utility companies today with over 15 years in a row of dividend increases with well above average dividend yields. Both were down for different reasons, and so if you want some heavy analysis in that particular sector, make sure you check out that recording. But for what you want to know here tonight on the market outlook video, just be aware that it was the worst performing sector of the day out of those 11 that we track here. And the other thing that I would point out is you'll notice that there's a green dot that shows up on our chart right here. Now that green dot, as a reminder, is basically notifying us that we ended with a oversold cluster signal using that market forecast indicator. Remember, you can right click on these charts and go to maximize sell if you want to see it in a little bit greater detail. But you'll notice that down below here on the market forecast indicator, we've got the green line, the blue line, and the red line all in that lower reversal zone below 20 on the same day. So that constitutes an oversold cluster signal. Now you'll notice back here, we have this red dot showing up on the chart, and that is when we get an overbought signal, when we have all three of those colored lines in the upper reversal zone above 80. You'll notice after that dot appeared right there, we did have a few days of pullback. So I wouldn't be surprised if we get some sort of a reversion to the mean in the coming days with the utilities. As many of you are aware, the utilities are very interest rate sensitive. And so when you have interest rates surging like we've seen here recently, so let me just kind of give you a brief show of that with the TNX right here. This is showing us what's happening with the 10-year treasury yields, and basically it's just been a freight train to the upside. So when that type of behavior takes place, you do oftentimes find that the utilities and the REITs struggle. In fact, as we come back on over here, and we take a look at the sector selector, notice that this particular graphic that I produced as of last Friday night does highlight the fact that utilities were already kind of falling out of bed even before this week. They slipped 2 full rankings week over week from 1 to 3. In addition to that, we also found real estate here with that yellow dot going from 4th place all the way down to 7th. So those rising interest rates are really starting to pressure some of those areas of the market. Meanwhile, we did see a slight tick higher in the financials, also partially due to that interest rate environment. When we come back on over here now to the other sectors, I just wanted to kind of point out, some of the strong trends that continue to exist here. We do have strong trends still in place for technology. Discretionary had a decent day, was up 0.42%. Part of that might have been what I mentioned before with the deal news that we heard with Michael Kors and Versace. We do see that the industrials remain in a strong upward trend, although the last couple of days have been some pretty strong pullbacks. I'd be curious if we have a bullish intermediate confirmation signal there, so let's check it. And indeed we do. We've got the green line in the upper reversal zone, the red line in the lower reversal zone. We remain above that rising moving average there. So we have seen a lot of money flowing into the industrials here recently. This may very well turn into an opportunity for those of you that are looking for some bullish exposure there. Other areas that are hanging in there okay are the energy space. In fact, the energy space was probably the best performer of the group here today, 0.64% to the upside. Notice that we're nearing 3-month highs on energy. The trend does not look great. It's been more of a reversal candidate in an area that was struggling, but then we got these oversold cluster signals here and then started to kind of unwind out of that position there. But, you know, as we take a look at maybe our next 12 grid here, let's take a peek at our inner market analysis 12 grid. I just wanted to kind of point out the oil market right now because that's been one of the hotter areas here recently. Notice that in the lower right-hand corner, we've got crude oil, and that's been a nice bounce off of that moving average here. Again, we're not quite to 3-month highs, but we're working on it. And some of you might identify that with your eye right there as being a potential inverted head and shoulders pattern, with that left shoulder being right over here, the head being right here, and then the right shoulder being right here. It's possible we get some further upside action right there, particularly if the US dollar can stay weak like it has been here over the last couple of weeks. Volatility was up today, but only up 1.8%, so it wasn't a big move there. But really the story here recently, as I mentioned before, has really been the breakout of Treasury yields. In fact, if we wanted to take a look at our yield curve chart, that's going to be chart 4J for those of you that are following along at home. And you'll notice that interest rates across the board have ticked higher here in recent weeks and months. We're fairly close. We're not quite as close as we were maybe a week or so ago, but we're fairly close to getting an inverted yield curve as well. Remember, that has not happened since 2007, so we're going to keep our eye on that particular story. But we've seen it, you know, whether you're talking short-term or longer-term rates, we've seen an upward boost in yields here recently. And remember, we got a Fed meeting coming out tomorrow as well, where a lot of people are predicting maybe another interest rate hike there, so keep your eye on that particular story as well. Let's take a look at a few more charts while we're at it here. Let's take a peek here at maybe 4H. This is your sector comparison over a year chart here. Remember, this is color coded. This is chart 4H in the upper left here. This is color coded for the sectors themselves. Now, I'll have a little bit of work to do after this weekend to do some conversions. Remember, the telecom space is effectively going away and is being converted into the communication services sector. So that's going to be a big change that will be taking place and will affect a number of different sectors as well. We'll kind of talk about that in a little bit when we get to our trade idea. But over the last year, you can see we've had 2 runaway winners, and it's been the consumer discretionary stocks in orange up there, and then also technology in red. So those are the 2 that are really leading this market over the last year, up about 30% in both of their cases. Meanwhile, we have kind of the utilities and maybe the telecoms that are struggling. Now, one thing to note about this particular chart is that those numbers do not include the positive impact that would have been made by the dividends. Remember, this is a price-only comparison here. So especially when we're talking about utilities, telecom, real estate, and staples, they're kind of unfairly punished in a head-to-head matchup against lesser-known non-dividend paying areas. So just be aware of that as well. But for the most part, this has been a market that has appreciated growth in more cyclical areas over the last year. If we kind of zoom into a closer time frame, let's look at a 3-month daily and see how that changes things here. Rather than a 1-year view, let's look at a 3-month view. And here you can see it's a little bit of a different story. Here you can see a market that's been led more so by healthcare and by the industrials. And we still continue to have those interest rate sensitive areas like real estate and utilities that are struggling, at least in the mega cap perspective. Remember, these would represent S&P 500 oriented companies in this particular graphic here over the last 3 months. So let's now take a peek at another chart here. Let's go ahead and review our international comparison now. This will be chart 4M. And this will give us a sense of maybe some of those foreign stock markets that are starting to work a little bit more. Remember, this particular graph kind of tells a very important story. Over the last year, the S&P 500 has beat all of these other major markets that are out there, whether you're talking about Brazil or Russia or China or India, Mexico, Canada, Australia, Japan, Germany, United Kingdom, Israel, South Africa. United States is beating all of them. Now, part of that's a currency story, but it is just a reminder that sometimes we don't realize how good we have it here in the United States as far as the amount of choices we have as investment possibilities and the liquidity of our financial markets. But just even from a purely price perspective, we've had it awfully good in the last year. Now, things may have changed more recently, so let's kind of zoom in beyond the 1 year time period and again go to a 3-month time period and see how that changes things. And here you're starting to see Israel breaking out. You're also starting to see Mexico doing a little bit better on a 3-month basis, but you still have the S&P 500 right here coming in at the number 3rd slot right there. So again, a lot of things to be thankful for here in the United States, as our markets have held up a little bit better on average than a lot of other places around the globe. Let's take a peek at another chart here. This time let's look at the commodities. This is going to be 4Q for those of you that are following along at home. And this will give us a sense of whether it's just the oil market that's starting to break out, or do we have other areas of note. And right now it seems to be largely an energy story. Notice how I've kind of structured these where we've got oil, natural gas, diesel and heating oil, and then gasoline up on that top rung. And then in the middle rung, we've got the metals, gold, silver, platinum, copper. And then on the bottom rung, we've got the ags with your corn, sugar, cocoa, and coffee. And what I'd say after looking at this, it strikes me that this is mostly an energy story right now, where we see USO doing reasonably well. We actually see a breakout in natural gas. Not a lot of people talking about that, but notice that we had a double top here on UNG from basically late June, and then again here in mid-August. That was just broken through here in the last 3 trading sessions or so. So keep your eye on natural gas, some positive price movement there. Of course, we got that nice higher low that's taking place on UNG as well. And while diesel and heating oil is not really lighting the world on fire, we do see that gasoline is breaking out. So while you might not appreciate that when you're filling up your SUV, for those of you that are trading UGA, that's a nice little breakout that we've experienced there as well. But otherwise, a lot of the other commodities are just still continuing to struggle, or at a minimum kind of meander sideways. But you know, some of these ag commodities like coffee really struggling down here. Now, maybe that helps support a company like Starbucks, which has really surged since the last week of June. Remember, if Starbucks is a heavy buyer of coffee, they would actually prefer to see coffee prices lower. So maybe they're cheering on this chart to the downside right here. All right, so a lot of different things going on with the markets. Let's take a quick peek to see if Nike has reported yet, since I know that was a hotly anticipated earnings announcement. We're about 20 minutes after the bell right now, so I'm not sure if they've reported yet or not. But let's try to figure that out here while we're on camera and figuring it out. Yep, and indeed they have reported. Notice that the price is down, so Nike did close the session at 84.79, and as you can see right now, the stock is off just a couple of bucks after hours. That's not the biggest deal in the world. Remember, the market maker move, as you can see up here, was $4.10, and so a $2 move to the downside is actually a very muted move. Traders were expecting a much more aggressive move, either up or down. If we went over to a chart, take a look at chart, let's say 2A on this one, and pull up Nike. You'll notice, first of all, beautiful looking trend here, right? A lot of controversy, of course, with the newest ad campaign and all of that, but it's hard to deny that this chart looks very good. It is a very strong chart with higher highs and higher lows. You'll notice here that this chart, this is 2A that we're looking at here for those of you that are premium market scholars. When you can load it up on your charts, you'll notice we've got the market maker upper band and the market maker move lower band kind of in on this chart in yellow right here to give us a visual sense of how far up or how far down the market makers are expecting that stock to move on their earnings announcement based off of how those options contracts are priced. And so again, with this stock only trading down to about 82.61 right now, that would put it about, let's see, 82.61, somewhere actually close to that moving average right there. And so still firmly within the bands of that market maker move that we're looking at there. So again, kind of a muted move there. Those of you that were kind of selling that volatility for the volatility crush may have actually had a nice move out of that one because we didn't get an extreme price move against the middle. And so anyway, we'll see. Remember, this is early days for this particular trade. It looks like earnings just came out here within the last 5 or 10 minutes. So by the time you're watching this video, it's entirely possible that it either ripped higher or ripped lower. But for right now, it looks like it's kind of just a steady Eddie mover after hours, and will actually retain that series of higher highs and higher lows if it can catch a bounce right around that moving average area right there. All right, that leads us now into today's trade application. And I wanted to focus on another well-known global company, not Nike, but in this case, Apple, the world's largest publicly traded company. And Apple was somewhat surprising to me today. I woke up to listen to the financial news, and one of the big news stories this morning was how Qualcomm is basically stating that Apple took Qualcomm's technology and gave it to Intel. That's a pretty major accusation, I would have to say. And so my initial thought was that, boy, Apple's probably going to struggle on a relative basis today. Now, I didn't expect it to get annihilated or anything like that. I just figured that stock would probably be down a little bit more so than the market in general. Well, that's not what happened. In fact, Apple was up 0.63% today, which would have beat all 4 of the major markets here in the United States. Not only that, but I do like the way that this is shaping up right around that moving average as well. Remember, Apple doesn't necessarily get all the accolades that some of those FANG stocks do, like your Amazons and your Facebooks and all of that, but it's just kind of a steady Eddie performer, and it just goes to bat for shareholders, including, of course, Mr. Buffett, the most famous shareholder in Omaha. But you can see that it's been quiet here over the last, let's call it 2-3 weeks or so, but it hasn't done anything to wreck the trend yet. The trend is still to the upside. And you can see that it just rested and kind of based right along that nice upward trending moving average right there. Well, you'll notice that in the last couple of days, we went back to having a bullish posture. And you can see that that green line on the market forecast is now popping a little bit higher right there. In fact, we could probably look at this over on chart 4A as well, so that way you guys can see the background colors a little bit easier if you're looking on a cell phone. So notice that green line is bouncing higher on the market forecast, and so this green shading is now occurring here on chart 4A, and it's showing us that we've got a nice bounce pattern off of a rising moving average where it almost looks like it wants to make a move. You can see a fairly strong level of horizontal support right down here at probably about 216 or so, where it was trading on a couple of these candles and on some of these candles and on some of these candles. So, you know, I wouldn't be surprised to see Apple make a move going forward. Now, keep in mind, we are entering earnings season. I did check, and it looks like Apple is going to be reporting at the end of October, so like October 30th. So keep that in the back of your mind as you're thinking about various options trades and different things like that. So what I thought we would do here today for our trade application, let's come over here to the trade tab. You can see I've already got the trade pulled up down below as I was looking at it prior to recording this presentation. And where I'm focusing on is the contracts with 31 days until expiration. Now, that's not your normal October monthlies. This would be the week after the monthlies. So these would be the ones that expire October 26th. Now, that's important because remember, if Apple is reporting their earnings on October 30th, some of you might want to be out of your trade prior to then because you don't want to wake up with some sort of nasty surprise on the stock either gapping up or down off of earnings. So anyway, this trade should expire prior to them announcing their earnings. And of course, this will be an important earnings announcement for Apple as they've just had some product announcements and different things like that recently. Well, you can see that I pulled up the 215, 212.50 bull put spread. And you'll notice that the 215 here would be, in this case, the 29 delta that we oftentimes try to focus on, right around that 30 delta. And you can see that if we combine those two things, where we're selling the 215 and buying the 212.50, we're going to get a credit of, right now it says 56. Now this was kind of fluctuating between 56 and 57 when I was reviewing it. Looks like it might have settled on 56 here. But if we go to confirm and send to kind of review what our return on risk would be, remember you can take the max profit, in this case $56, divide it by max loss, 194, and that is basically giving you a 28.8% return. Now again, if you wanted to, put it in at 57 cents instead of 56, your return on risk would be that 30%. But anyway, 28.8 is close enough for me in this particular case, so I think that's what we'll do. Now, just to catch everybody up to speed in case you're not quite as familiar with options trading, and remember, David's actually got a directional options trading room that will be conducted here today at 6 p.m. Eastern Time, like he does every single Tuesday. So for those of you that are premium market scholars, make sure you're joining him for those directional option strategies trading rooms if you want to learn about these strategies in a little bit more in depth. But basically what we're doing here when we're selling a bull put spread is we're saying we want the stock to go up, but if it goes sideways, we're still okay. In fact, if it goes down a little bit, we're still okay. Notice that the break-even price on this trade is $214.44. Notice that the current price of Apple is $222.19. So in other words, as long as this stock does not go down, let's say $6 or more, then we should make money on this trade idea. Now, if it goes down more than $6, then we will lose money. So just keep that in the back of your mind. But kind of a distinguishing aspect of this type of a trade is it's a credit spread, and therefore we make money off of time decay. So if this stock just went nowhere, pretend in your mind that 31 days fast forwards from right now, this stock stays exactly at $222 the entire time. Remember, if you bought shares of Apple, you don't make any money if it's exactly flat. But if you sold a bull put spread, you will make your full profit if it stays flat from here. So while we think the posture of Apple is bullish and we hope that helps our trade, we don't necessarily need a big surge in Apple's share price in order to succeed with this type of a trade. So I'll go ahead, send that one in, and we'll see if we can get filled on that first thing in the morning. All right, well, I want to thank you for joining me here today. Another exciting day in the stock market. Most markets remain pretty resilient for the most part. Yeah, we closed near the lows of the session, but trends remain intact right now. Remember, we got a Fed meeting and announcement here tomorrow, so keep your eyes on that. We've got Nike coming out with their earnings, as I mentioned before, so that could have some possibility of affecting market prices tomorrow morning as well. But David will be back with you tomorrow, then I'll be back with you after that for the rest of the week. So have yourself a great rest of the night and have some good success with your trades as well. Take care, everybody. Bye-bye.